Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 10th of June 2021, and we're looking at US CPI data published today, and we can see that both gold and silver recovered slightly as a result. So let's take a look as to what's been happening and why. Bloomberg article dated 10th of June 2021 at 6:02 p.m. GMT+1. Headline: Consumer prices in United States top forecast, stoking inflation concern. Prices paid by US consumers rose in May by more than forecast, extending a months-long build-up in inflation that risks becoming more established as the economy strengthens. The Consumer Price Index climbed 0.6%. The second largest advance in more than a decade. Now that is very important to take into account. Though distorted by the pandemic, the CPI jumped 5% from a year ago, the largest annual gain since August 2008. So we're talking at the time of the last crash, according to Labor Department data Thursday. US core and headline inflation both increased more than forecast in May. The gains were in large part driven by the pricing snapback in categories associated with a broader reopening of the economy. The CPI report showed steady growth in the costs of used vehicles, household furnishings, airfares, and apparel. Now, clearly the stimulus will have had something to do with this, no doubt. People actually had some money in their pockets to spend, which was the whole purpose of it in the first place. The increase in previously owned cars and trucks accounted for about 1/3 of the total monthly advance in the CPI, the Labor Department said. Now, while the large gains in these areas support the Federal Reserve's view of temporary price pressures, because we know that the Fed has said that there will be a rise above the expected rate of inflation short term, but they would bear with them, it says we see signs of inflationary pressures broadening out, which we believe will keep monthly price gains from merely falling back to their pre-pandemic trend, Wells Fargo and co-economist Sarah House at Shannon Series said in a note. Price pressures continue to build across the economy as businesses scramble to balance a rush of demand against shortages of materials, because obviously due to the lockdowns and pandemic, they will not have stocked high levels of materials, or in some cases even been able to access them, and in some cases labour. Shipping bottlenecks, higher input costs and rising wages are challenges to companies looking to protect profit margins. Who would have thought it? Excluding the volatile food and energy components, the so-called core CPI rose by a larger than forecast 0.7%. The core measure rose 3.8% from 12 months ago, the most since 1992. So we're almost talking 30 years. It also distorted by the comparison to the pandemic-depressed reading last year. Underscoring the clear acceleration in inflation more recently, the core CPI over the past 3 months had increased at a 5.2% annual pace, the fastest since 1991. Now, if we have a look at the categories which saw outsized price increases in May, we can see here vehicle rentals 12.1, used cars and trucks 7.3, airfares 7, new vehicles 1.6, household furnishings operations 1.3 and apparel 1.2. Strong consumer spending on merchandise, in part driven by government stimulus, which is what we mentioned earlier, has led to growing order backlogs and lean inventories. The lifting of pandemic restrictions, increases in vaccinations, and a flurry of social activity are translating into more services demand, another propellant for inflation. The May CPI report shows reopening sensitive categories dominating price pressures for a second straight month, Bloomberg economists Andrew Husby and Yelena Shulyateva said after the release. The question economists and investors are wrestling with is whether these factors will have a temporary impact on inflation, as the Fed expects, or whether they'll become more ingrained against a backdrop of massive fiscal and monetary policy support. Now, of course, the comment we make here is with regards to inventories. If they're short of stock, they're going to push the price up because the demand is greater than their ability to supply. Once those stocks eventually come back into warehouses or into the various companies requiring raw materials, then of course those prices could potentially drop. So, and this is what the Fed is expecting. While there are shortages, of course prices will go up, but once the normal supply chain reverts back to the norm, then that should not impinge on prices. That's the theory. It says, after rising earlier, the yield on the 10-year Treasury slipped back below 1.5% as investors digested the data. The dollar was little changed and the S&P 500 advanced to a fresh record. Separate figures showed applications for state jobless benefits declined again for a 6th straight week. And we've said Thursday this week would be an important, or the most important day for data, and it looks like this is what's happening. A slew of companies have raised prices or announced plans to do so. Even though orders and backlogs at Hooker Furniture Co. are elevated, we're cautiously optimistic considering the industry-wide supply chain, logistics and raw material shortages and inflation, Chief Executive Officer Jeremy Hoff said on the company's June the 4th earnings call. We believe we've mitigated these dynamics as much as possible through surcharges and price increases. There we go. I hadn't read this. I started this right at the beginning. We can see that what I've said, they are actually passing on. Now, Fed Chair Jerome Powell has said upward pressure on prices is likely to be temporary, noting in late April that in an episode of one-time price increases as the economy reopens is not the same thing as, and is not likely to lead to, persistently higher year-over-year inflation into the future. And there is an argument to support that. Of course, though, the undermining of the US dollar as a result of the level of dollar printing, however, will instigate a degree of inflation into the economy because you'll be able to buy less with those dollars. But as we've mentioned in previous videos, that to a large degree, not totally, but to a large degree, is also comparative with the currencies of other countries. So clearly, if everybody is devalued, then buying or purchasing parity remains the same. It's only when there's a discrepancy to the extent to which those devaluations have occurred, then that affects the rising costs of imports. Others disagree, citing trillions of dollars in fiscal support, the likely persistence of product shortages and rising labour costs. Bond market expectations for the pace of inflation of the next 5 years have been easing from a 15-year high last month, but remain elevated. So the markets are not totally convinced, partially but not totally. The frothiness in CPI continues for now, but between base effects and pent-up demand pressures, it's probably not giving a definite answer to the great inflation debate. And you need to read the bond market tea leaves, said Anu Gagar, Senior Global Investment Analyst at Commonwealth Financial Network. While wage growth has blown past economists' estimates in the last 2 monthly jobs reports, the rise in consumer prices has taken a sizable toll. Inflation-adjusted average hourly earnings declined 0.2% in May after a 0.1% drop. Separate data showed on Thursday. The retreat in real earnings, if it persists, could prompt workers to ask for a bump in pay. Shelter costs, which make up a third of the overall CPI, rose 0.3% after rising 0.4%. The increase included a 0.4% gain in hotel costs and a 0.3% increase in owners' equivalent rent. While transitory factors did a lot of the heavy lifting driving the May upside, the more persistent components like rents and OER firmed up as well, much more than expected, pointing to a firmer source of foundation for the inflation data as the transitory factors begin to fall out of the figures, economists at Morgan Stanley said in a note. So a little bit technical going into some of that, but the bottom line is CPI has gone up. It's consisted of the areas we've mentioned. The Fed appears unconcerned because its attitude is it's only temporary. Of course, there are limited stocks and supplies of raw materials. Labour hasn't fully come back to the market as yet, and therefore prices are pushed up in the short term because there's more demand than the ability to supply, but that over time will even out. And there is, of course, a degree of truth in that based on historical context. So let's now take a quick look at what's been happening to gold and silver prices. It's now, we're doing this at 1942 GMT plus 1, so a little late in the day for us here in the UK. But let's have a look at how gold and silver have fared and equity markets. So if we take a quick look, we can see at the top here, gold is 1,895, silver's gone up to $27.93, and platinum's 1,155. Just a very brief look at the price charts today. And if we look at gold in dollar terms, this is where it ended last week. It dipped initially, it then rose, peaked, I think, slightly on Tuesday at 1904, sort of meandered, fell back quite considerably this morning, but then after this data coming out, which is a little bit surprising really, gold has recovered somewhat. And as already mentioned, it's now $1,895. Started the week at $1,891, so at the moment it's $4 higher. If we take a look at silver, silver started the week, or ended last week, at 27.81. Again dipped, rose, dipped, peaked yesterday at 27, let's have a look, 28.01 technically. Fell back and has risen again now, and it's just off $28 level. For those who follow our weekly updates, you'll be aware that I think we've predicted silver trading between 27 and 28.50, and it looks like that's going to happen again. And cryptocurrencies, just a very quick look at those, and we can see that even Bitcoin has started a recovery today. Let's do it on the day, that's on the week. Yeah, it's gone up, but it's back and forth at or around this $38,000 level. Now, looking at stocks, we can see that at the moment, the Dow Jones is up 73 points at 34,520. We can see the S&P 500 is 4,242, up 22, and the Nasdaq Composite is up 99 at 14,011. UK markets are now closed broadly, although technically marginally down, broadly unchanged. And we'll have Asia Pacific this evening. And the spot index is just, although it's down today, it did creep up marginally above 90 yesterday. And it's marginally above 90 at the moment at 90.07. So that's it. Quick roundup. We can see that the data has affected markets. We can see it's the CPI has made the biggest change, and we look forward to seeing how the end of the week actually pairs off. We've got gold and silver not that much different to how it closed last week, and we'll see what effect it will have by the end of this week, which we shall then update you on Saturday. Thank you for listening. If you haven't already done so, please subscribe to our channel, give us a thumbs up if you think it deserves it. Don't do so if you don't think it deserves it, and press the bell sign so you're notified of our videos as and when they are published. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.